Hello, good evening, traders and investors. Alex here from MarketWise Asia. Thank you for watching this live stream today. It is Tuesday, 25th of August, 2026 at 10:30 p.m. So just to make sure that everything is good, okay? If you can hear me loud and clear, please say a hi to me in the comments or in the chat, okay? So this live stream is broadcasted on both YouTube and also on Facebook as well. Okay, I can see Hian Ling and also Dave. Okay, thank you so much for your response. Right, if you can hear me loud and clear, please say a hi to me in the chat. Okay, Yue Lam, Ken, Jin. Okay, thank you so much. Okay, for being here and being on time today. So as usual, okay, Florence, good to see you. So as usual, the first part of the session, I'll go through the macro aspect. Then the second part of the live stream, I'll go through into the technical part of the session, go into the charts, okay, and of course, okay, to share with you, okay, what opportunities are there in the market right now. Okay, Mary, hello, Hadley, thank you so much. So before I kickstart, just want to let you guys show you guys a disclaimer first. Whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence over here. Okay, let me see. Okay, so I just want to also quickly share the social media page for the seasonal vantage over here. Okay, so like I mentioned, okay, I have been so-called creating a sub page for seasonal vantage over here. Let me just share my screen here. Okay, so this is the seasonal vantage social media page lah. So let me just share the Tesla hi. Okay, so let me just share the link to you, so you can also see the QR code over there. So the Facebook and YouTube and not Telegram, I mean the Instagram, it is here. So let me just highlight it. So I hope you guys, whoever follow, okay, can just go and follow. I mean, I recently, I just, as I mentioned, okay, didn't have a lot of following yet because, as I mentioned, okay, I just created this page, social media pages not too long ago. So please go ahead and follow. So I've also pasted new stuff over here. Okay, all right. Stock seasonality screener. Recently, I talked about how I used to screen certain stocks over there. Okay, and how I screen this BMY over here, and then for the seasonal advantage. Okay, so I caught MRK, for example. I caught this BMY. So these are case study. So I mean, if you are on MarketWise Asia, maybe you will not see it lah. So please do subscribe, okay, at the Seasonal Vantage YouTube and also on the Facebook, okay. Instagram also do post the social media posts as well lah. Okay, so do share this link. I will share this link in the comments in the chat. So do go and follow and subscribe. Anyway, it's free. Okay. Hello Dan. Hello Bernard over there. So let's kickstart this session right now. Let me undo the QR code first lah. So don't block the way. Okay. All right. So let me see. Okay. Right. Today's session. Okay. So yeah. So you can see over there. Okay. Will Nvidia save the market? Okay. This coming week, because if you are not aware, right, Nvidia earnings, okay, announcement is coming up, okay, on Wednesday after market close, okay. So if you take a look, US timing, okay, US timing, so which means that it's Thursday already, I think, okay, for Singapore time. So if you go to the earnings hub over here, so you can see that the Wednesday, okay, Wednesday after market close over there. Okay, this is Nvidia. So all eyes are on Nvidia. This is one of the biggest market cap, okay, in the US market over there. Okay, so let me just go through my session right now and can see or not? Everybody can see the whole screen. If you can see, okay, for those who just joined, okay, can see everything is good, just type yes in the comments over there. Hello SK. All right, before I continue over there, the 40 trillion question, okay. Why is it 40 trillion? Okay, can see everything is good, huh? All right, so let me continue right now over there. All right, so I'm not sure whether you're aware. I mean, that for this week, at the start of the week, okay, there have been talks about the EU. EU has been running away all right, the 30-year Treasury yield hits 5.27%. So if we go back, okay, it'll go back to until 2007. It's like about 20 years ago already, okay, to hit this 30-year Treasury yield at 5.27, which means that if the Treasury yield, okay, has been climbing up and has been surging, which means that the Treasury bonds price has been coming down because yield and price, okay, are inversely correlated. Okay, and okay, the US national debt has crossed the 40 trillion threshold. That's why you mentioned about the 40 trillion threshold. But anyway, okay, I know that it is sensational, okay, whenever the market press, okay, the media talk about the US national debt and all this, okay. But ever since I have been in the market since 2011, okay, more than 15 years ago, okay, I mean that this is just a sexy headline. Okay? It doesn't affect the market, okay. I mean that people can talk about it, whether it cause the market crash or whether the US debt, it is unsustainable and such, doesn't matter. As long as the US, it is still the world reserve, okay, currency, okay, this one doesn't matter, okay, right? What matter more, it is actually the Treasury yield over here. Okay, in case you are not aware, let me just go to the chart. Okay, I will just cross over to the chart here and there, okay, sometimes, okay, so you can see over there that the Treasury yield, okay, I'll just do a line chart again. Sometimes it is easier to see. Line chart, where is it? Okay, line chart will be here. Okay, Treasury yield bonds over there, maybe do a naked chart over here. Okay, so you can see that right now, when I do the presentation slide, okay, so it is somewhere around here, 30-year Treasury yield, okay, about 5.2% there. Okay, all right, so have to go back to weekly time frame. All right, that's what I meant. Okay, at that point in time, 2007, it is over there, okay, to hit the 5% mark, that area over here. So this is what I meant, okay, from the deck over here. Okay, all right, so why is it happening right now? Okay, why is this happening right now? Because, okay, after the US market actually hit a record high in early August, okay, so the focus now is back to the so-called the crushing weight of the Treasury yield. So the long-term bonds yield, okay, like I mentioned, hit 5.27. Okay, so it is a little bit okay, a paradox. I mean, that is a bit strange, okay, because, okay, the yield is climbing when the payroll, okay, is weak, okay, and then lower inflation, okay, and then fewer expectation of the rate hike, okay. So all these are signaling that, you know, the so-called the Fed wouldn't want to increase the interest rate, or wouldn't want to do a rate hike. But, okay, surprisingly, okay, the yield continue to go higher. So that is the interesting part over there. But on the other hand, okay, what is causing the equities market to continue to go higher, okay, in spite of despite of this high treasury, as in high yield, it is because, okay, S&P earnings continue to be on pace for a 48% year-on-year growth. Like I mentioned, okay, equity market is brushing against the high. So all in all, this is conflicting. I mean, at least this is trying to stop the market from, you know, dropping, because if the yield is going too high, okay, that will cause those so-called growth stocks, okay, to go down lower, okay, and also that, you know, some of these money to go into the treasury bonds, okay, so competing against the equities market, so that will cause the equities market to drop also. So far it is still holding on fine, but will it continue in August and September? That is a difficult question to answer right now. But anyway, so let's just continue over there. So like I mentioned, there's a great disconnect, right? So, you know, despite a weak July payroll, inflation is not running away, okay, and then a dovish Fed, okay. So, you know, the Fed doesn't want to really increase the interest rate, but, you know, but like I mentioned, okay, the yield has been rising, even though, okay, the Fed kind of pauses over there. So you can see over there, the dotted line here, okay, the Fed fund rate, it is actually about 3.75 to 4%, it is there, but, okay, the 10-year yield is already above the 4% mark over there. So going back to the chart over there, right? This is the 10-year yield, okay? Right, it is more than 4.6% already. Okay, this is the 10-year. You can see that it is kept going higher over here. Okay, 4.6% is going higher already. So this is what I meant by that. All right, so the anatomy of this 10-year yield. So why is it going higher recently? There are a myriad of reasons, but okay, based on so-called common sense, okay, I mean that based on whatever information that's available in the market and what the media it is telling us, okay, US debt it is actually more than 40 trillion. So the US government has to keep issuing so-called bonds, okay, to fund their purchase of the debt and everything now. So so when there's a lot of supply, okay, the bond price will go down, okay, and if the bond price go down, then the yield will go up. And of course, in recent one year or so, okay, there is a lot of corporate debt, okay, they issue the bond, corporate bonds, companies issue bonds, okay, and it is higher up, okay, 27.1 year to date. And this is a lot of them, it is tech borrowing because of the AI. So you can see that, for example, recently, if I'm not mistaken, Google also issue bonds, right? They want to fund their capex and such, right? So they issue bonds, okay, basically it's an IOU, okay, it's a bond, okay, so they borrow money, okay, from investors to fund, okay, whatever course they are doing now, okay, whatever things that they want to fund their for example, AI or whatsoever, okay. And maybe because of the geopolitical friction, maybe the market it is pricing in, okay, that okay there will be tension, okay, in the coming weeks, in the coming months, or in the coming years. I don't know, okay. So the crude oil it is back to $87 per barrel. I mean that for those, okay, who are inside seasonal vantage insiders, you should already prepare. Okay, I mentioned that, okay, based on seasonal data, okay, the commodities, okay, might be going higher, and this has happened again, okay, last week or so. All right, in fact, for the public live stream last week, I already mentioned that, based on seasonal data, okay, and of course considering the price action, okay, there is a possibility that the oil will continue to go higher, okay, and this in fact has already gone higher already, okay. So this is for SVI members, this isn't a so-called surprise to you, but anyway, okay, because of that, okay, the market, of course, as a trader, we can profit from trading the crude oil and such that. But from a so-called economy point of view, okay, a high crude oil price is not good for the economy, okay. All right, and then this is global synchronization, okay. In fact, for the overall market, okay, Japan, Germany, okay, the EU has been going higher as well. It's just that the US market, okay, the US has been lagging, okay. So I mean that maybe it's trying to catch up with the overall global bond yield, okay. So these are the few reasons here and there, okay. And maybe, okay, the price of uncertainty, okay, that is driving the price, not the price, I mean the yield, okay, for investors, okay, to buy into the bonds, okay, and they demand a higher yield. Okay, if you want me to buy your bonds, okay, I need a premium. I need a premium because of the uncertainty ahead, okay. And of course, okay, reduced forward guidance by the Fed chair, Kevin Walsh, okay, means that investors are a bit uncertain what the futures might hold over here. That's why they wanted to have more premium, okay, for holding longer term US treasuries over there. So you can see that since 2021, okay, the 10-year yield, 30-year yield has been going higher. So this is what I meant by that over there. And okay, if you are, I mean that if the recent, not recent, I mean that this coming week, okay, the news talk about Kevin Walsh bonds buyback over there, okay, Fed, okay, bonds buyback over here, okay. So you can see that, okay, you can see the news over here, okay, US Treasury, okay, bonds buyback, some Besson, disagree with the Fed buyback and such, okay. So there are news on that. So the US Fed, okay, is trying to buy back a bond. So basically they buy back, okay, to cause hopefully to cause the demand, okay, of treasury to go higher. But okay, they talk about 1 billion to 4 billion, that kind of stuff, right? Okay, it sounds a lot, okay, maybe to a layman term, okay, 2 billion per session, 4 billion per session, okay, sounds very big to you, okay, but in fact, comparing to the 32 trillion, okay, in total size, that is actually very small, okay, like 2 billion compared to 32 trillion, actually that is very small, okay. I'm not sure whether you guys know or not, okay. In fact, like 1 billion and 1 trillion, do you guys know the difference or not? Okay, 1 billion of course is 1,000 million, okay, 1 trillion is 1,000 billion, but you know, the numbers are so huge that it can be quite difficult to grasp as well. Okay, maybe just share with you, asking, okay. All right, so maybe, okay, 1 billion, okay, to show you, 1 million in seconds, 1 million in seconds, okay, 1 million in seconds. All right, 1 million, if you do in seconds, okay, in time, okay, 1 million, it is actually about 11 days, okay, 13 hours, 46 minutes, 40 seconds, about 12 days, okay, all right. But 1 billion, okay, you can see the jump already, 1 billion, BI, 1 billion in seconds, all right, so 1 million in seconds is about 12 days, 1 billion, okay, in seconds, it is actually 31 years, you know. 1 million to 1 billion in seconds, it's jumped to 31 years. So 1 billion, okay, in seconds, 31 years. And what about 1 trillion, okay, in seconds? So that's a good way to, how to say, to give you a feel, okay, a context, how big a trillion actually is, okay? Remember, 1 billion, it is 31 years, right? 1 trillion in seconds, you guys can see, right? 1 trillion seconds, right? It is actually 32,000 years, about 32,000 years. Can you see the vast difference between 1 billion and 1 trillion or not? Okay, I repeat, 1 billion is 31 years. So you go to 1 trillion, immediately it goes to 32,000 years. Okay, so that is what I meant, okay, by, right, so this 2 billion to 4 billion buyback per session is just very small compared to the whole treasury market, okay? Right, do you guys find this interesting? Do you guys know that 1 billion second, it is actually 32,000 years? Is it interesting to you? Can you see the context, as in the relative size or not? Okay, if it's interesting to you, you can just type yes in the comments or not, okay? Or did somebody try to portray this in such a comparison in this context? Okay, can, right? Just type yes if you don't even know that how big a trillion is until today. Okay, so this 2 billion to 4 billion are nothing much one. Okay, it's very, very small. So basically, you know, we are expecting that, you know, the 10-year yield, okay, to stay between 4.5% to 5%. Maybe will not help much lah. But anyway, okay, the Fed has already dropped a hint, okay, that the Hosen say long-winded, then you don't need to listen to me lah. It's okay, man. Okay, you can just turn off the live stream now. Okay, it doesn't matter. All right. So so it doesn't have expect 10-year yield to stay anchored between 4.5 to 5% over there. Okay. All right. So the casualty of the 5% yield, of course, you know, when the yield is a bit high, okay, at an elevated rate, right? So the mortgage rate, okay, will cause a stress in the real estate market as well. Okay. You can see that, you know, when it is actually at more than 5%, okay, all right, the high borrowing cost, okay, this is the existing, this NAHB is related to the real estate market one, okay, so you can see that, you know, the demand for housing real estate, okay, has dropped also, and because high mortgage rate, okay, people will have difficulty, okay, also called service their mortgage loan as well, okay. All right, so these are the casualty of a 5% yield over there. And of course, okay, these are the rate sensitive economy, okay, housing rate mortgage, okay, this will cause the housing, okay, to contract as well, okay. But on the other hand, okay, the S&P, AI infrastructure, everything, okay, are still quite okay for now, okay. All right. And the savior, like I mentioned, okay, just like at the start I mentioned already, okay, the savior, it is at the earnings for the S&P companies overall, okay, the US company are still doing pretty well, okay, year on year it is about 48% growth, okay. So the full earnings are paced to rise by about 31%, okay, led by the mega cap AI strength. Fundamentally, okay, all right, decoupling the equity performance from the bonds market gravity, okay, all right. So like what I mentioned, right, okay, the not confined to Nvidia and the mega cap, overall, okay, not just S&P, okay, poised to have earnings growth, okay. The mid cap, okay, small cap, they are also benefiting from that, which I think I mentioned that previously also, okay, earnings are still doing okay, right? So the market is not excessively expensive yet, okay, because earnings are still intact, okay, all right. And so, but there's some paradox, okay. So because the tech borrow billions because of the increasing corporate debt, okay, corporate bonds over there, that that could influence, okay, the federal EU also, because flood the fixed income market, and that caused the yield to spike also. After that, okay, all right, then that will cause the housing to choke. Okay, so this is like a one loop like that. Okay, so these are something that we need to be aware of. Okay, all right. So overall, okay, equities market, okay, for the midterm election, okay, equities, okay, maybe August, September, there could be some headwind. But overall, okay, based on historical data, all right, so it is actually quite okay, especially after the September, typically after the midterm, as in during the midterm election, October, okay, the last quarter can be quite bullish. But anyway, we still need to look at the price action. Okay, all right. All right, so that is all for the macro aspect. So in this coming week, okay, the focus, it is still focusing on the EU. Okay, EU is still at a relatively high over there. Okay, but let me just share with you you can see over there. Okay, the bond 30-year bond, bond euro. Okay, all right. So in fact, if you look at the so-called the seasonal trend, okay, if you look at the seasonal trend over there, okay, so I mean that you can, this is from the SVI Alpha bot over there, from Telegram bot. So if you take a look at TLT, okay, TLT, okay, TLT, you can see that for the bonds market, which I actually mentioned to my members just now, okay, I mean, I can share with you guys, okay, this is my personal view, even though, okay, right now we are in the bearish window over here for the bonds, okay, right, typically, okay, for the past 10 years, okay, 27th of August, okay, until 21st of October, okay, typically the bonds market, it is bearish, which means that typically if the bonds market is bearish, then the yield will spike, you go higher. But if you take a look at the so-called the bonds market right now, okay, all right, it is actually, okay, let's take a look at TLT, okay, easier to look, okay. So it is actually chopping down, okay, at a very low over there. It's kind of chopping, but it did not really go down lower, okay, all right. And the Fed has already so-called warned that, okay, they wanted to control the bond price. They wanted to control the bonds. They want to keep it, how to say, what's the word correctly? I mean, they don't want to keep the bond yield elevated. Yeah, they don't want to keep the bond yield elevated. So they want to try to suppress it down. They are very clear really. So as I mentioned to my members just now here, I can just share with you guys over here. Okay. All right. It is actually in a bearish window. I can't zoom in, but I'll just share with you what I say. Okay. But I wouldn't want to short the bonds market right now. So as I always mention, right, we don't just enter based on seasonality alone. So we still have to see what the price is doing right now, price action. Okay, what is the current market condition and what is the context. So the context right now, it is, okay, the Fed want to actively intervene, okay, in the bonds market right now. Of course, whether they can really intervene, it is another question, but I think they can. Okay, all right. So the Fed has really stated very clear that it wants to control the runaway yield. So don't fight against the Fed. Okay. So like I mentioned, price action also seems to suggest that the downside momentum, it is weakening. So right now, I'm not bearish on the bonds price right now, even though the seasonal data say so. Okay, so which means that okay, even though seasonal data is saying that bond price by right should be coming down like that, okay, but I am actually bullish on bonds price right now lah. Okay, I'm actually bullish on price right now. So if you add in the usual indicator, the cloud, okay, the cloud indicator here, okay, all right. So remove the line over there. Okay, so you can see that prior to that, okay, generally price has been going down below CPR. Price did go above CPR, but after that the price keep going down. Right now, we can see that bond price, it is actually above the pivot point level right now. Today is the first day for this August. Okay, it is above the pivot point right now. Okay, it's not above the CPR. CPR is upper range, but it's a good start. Okay, price is above the pivot point right now. So you shouldn't want to be so bearish right now. So for me, okay, you can choose not too long. Okay, it is okay if you don't want to buy or what. Okay, I mean if you're looking into treasury bonds, but I wouldn't want to short the treasury bonds market right now. Okay, clear? Clear so far or not? If you are clear, just type okay in the comments. If for those who just joined right now, about 80 people, okay, combined on YouTube and Facebook, okay, do like my Facebook page, okay, and also subscribe the YouTube channel. Give me some likes, okay? I really appreciate that. Okay. Clear? So this is that. Anybody can remember what I mentioned last week on the indices? Okay. Can remember or not? All right. Anyway, last week I think I mentioned that overall the market should be doing fine. Okay, but last week, okay, the market actually didn't do as well as it is. Okay. All right. So yeah. So you can see over there. So I think I also mentioned about the options flow for last week, right? Last week combined. Let me just show you here. Combine over here. Combine this one. Okay, so yeah, based on the options flow last week, okay, it seems bullish, but okay, there is a caveat over there. Okay, there is a key warning sign. Okay, I mentioned that even though it's bullish, okay, but the price action must confirm. So key warning sign was if S&P SPY, the S&P 500 ETF, okay, is below 770 and QQQ 720, then you need to be a little bit cautious really. So if you take a look at S&P SPY over there, okay, 770, it is actually here. Okay, 770, it is actually here. So you can see that, after last week, okay, Monday is still above 770, okay, and then price close below 770, and then price try to hit above 770, and then get resisted, price continue to go down from here. Okay, so that was the warning sign. Price action plus the options flow was below the certain key level, so need to be a bit cautious. Same as for the QQQ as well. QQ was the key level. Key level was actually 720. Yeah, also below 720 over there. Like I can see over there. Once it is below 720, price just continue to go down lower. Okay, so if you add in the usual indicator over there, you can see that overall the market it is actually still above the central pivot range over there okay, but need to be a little bit cautious. Okay, what I mentioned to my members for this coming week, it is that based on the combined indices analysis, okay, overall, okay, the market is a bit defensive. Okay, bearish doesn't mean that market is going to crash. Okay, I repeat, okay, so this is very important over there. Banner disclaimer, okay, not financial advice, purely educational over there, but also need to understand what I'm trying to say. Okay, bearish means that the market might be defensive over there. Okay, so bearish confirmation. Okay, so as long as base case over there, as long as price stay below this level, okay, so in order for the market to go bullish, okay, S&P need to go above 775 and QQQ 725. So we are still some way to go. So 725, it is actually here. Okay, 725 somewhere around here. Okay, so we still got some way to go over there, and S&P 775, right? 775, it is over here. Okay, all right, so it is there. All right, so we need to be just a little bit careful, which means, okay, it tells us that if the S&P and QQQ is weak, okay, what are the companies inside S&P and QQQ? All right, are they big or small? Are they big or small? Okay, can you tell me or not? Big, say BIG or big lah, okay, or small, or is it B or S? Okay. So if indices are weak, okay, they are big, right? Zach say big. Yes, so the S&P and the Nasdaq, they are generally bigger companies. So you just need to be a little bit more careful. Of course, okay, Nvidia is actually the market itself, like Nvidia, okay, as I mentioned already, okay, Nvidia has been, I think if I'm not mistaken, based on statistics, okay, it has been down for the past, don't know how many sessions, 7 sessions, 1, 2, 3, 4, 6, 7, okay, I think I saw somewhere, I think, don't know, since 2022 or what, it has the longest streak of consecutive down day already, okay, so, okay, all in all, Wednesday or Thursday Singapore time, okay, this is where the market, it is going to be volatile, okay, because we won't know how the earnings will react, okay. Of course, if Nvidia, it is going to be bullish, I mean that if after the earnings price gap up or whatsoever, then that would likely push the market to go higher as well, because Nvidia is so big that it is the market itself, okay. And okay, if you want to know what is the implied volatility for the companies over there, okay. So for Nvidia, this is from Spot Gamma over there. So this is the implied earnings move over here. Okay, implied earning move over there. Okay, so Nvidia, okay, based on the options prices right now, okay, Nvidia, the earning move is going to be about 5%. Okay, which means that after the earnings, either it gap up 5% or gap down 5%. So, but we won't know which is the direction. Okay, we won't know which is the direction. Again, doesn't mean that good earnings, good revenue, you get up. It doesn't mean so. Okay, it is the expected. Is it above the expectation or not? Okay. In fact, even if it is above the expectation, it can still get down also. Okay, so again, I always say, okay, if you try to go in just before the earnings, right, it is a bit one大小啦. We are just trying to gamble big or small. So typically, just before earnings, I wouldn't like to do anything. Okay, so by having said that, okay, today the overall market, okay, indices is pulling the market up. You can see that the S&P Nasdaq is positive, while the RSP, okay, it is actually coming down over here. Okay, it is coming down over there. Okay, so again, just to be cautious, okay, and if you take a look at the DP gallery chart over there, and take a look at the market breadth and such, okay, you can see over here that the percentage of stocks above their 20-day, 50-day, and 200-day MA, okay, price has been coming down. So, right now, only about slightly about 56%, more than half it is above the 20 days moving average. Above 50 days, still 60% or so. So, in fact, quite a bit of the stocks already have some pullback. Already. Only about more than half, slightly more than half is above the 20-day moving average only. Okay, and if you take a look at the advanced decline line, okay, I mean that again, don't need to be overly bearish, because if you look at the advanced decline, also one of the market breadth indicator, okay, the advanced decline line, okay, it is also at near the all-time high, okay, so it is still in a bull market, okay, so don't be so afraid that wow, market is going to crash, that kind of thing, okay, we are still in a bull market, okay, and if you're talking about the sentiment chart over there, okay, interestingly, okay, the market sentiment, it is not very good, okay, it is still at about elevated at 40%, it is still bearish about the market, which is good in a way that, okay, if everybody is bearish, okay, then the market can poise to go higher. So I think maybe some of you forgotten, I talked about that. Typically at about 40% mark, okay, we will typically mark a correction low lah, okay. You can see many times, okay, 40% mark, okay, somewhere here, okay, it marks a short-term low. It can go to 50% mark, so-called the sentiment, bearish sentiment data, then typically it will mark a low, okay? But anyway, not yet there, but it is also not very bullish yet. So overall, okay, I think, okay, still okay lah, the market for now, okay? And having said that, okay, you know, it can feel that some of these, for example, how to say, SMH, okay, semiconductor stock, okay, has been coming down. It's not very good, okay. DRAM, the memory stock over there, okay, also has been coming down. It's not very good, okay. That is because maybe you are too gravitated towards the tech stock already, okay. The market, it is actually still in a rotational market, okay. Maybe the tech is weak, okay, but other sectors are still doing quite okay. The reason why, maybe for some of you might feel that, oh, my portfolio has taken a hit or what, or because you have too much tech stock already, okay. So maybe this is, what is it? What is the, just now I forgot to see, it is glass, what's the, coin glass, okay. All right. So this is a good way to show you. This is from coin glass. I mean, this bubble, interesting, okay. The reason why you are so focused on the tech stock, because that is all the stock you know only, okay. Simply like Apple, like Nvidia, Microsoft, Meta, okay, or even AVGO, okay, Tesla, SpaceX, AMD. These are only the stocks that you know, but there are many other individual stocks out there that have opportunity that you are not aware of. For example, this is MRK, not exactly very small, but you know, I just do a case study over there. Okay, this is MRK. This is Merck over there. Okay, so you can see that, you know, when I first mentioned about MRK to my members over there, okay, of course you must say, oh, lucky, because you know, they announced they have some cancer treatment thing in the stage 3, whatever it is, but it is also within the bullish seasonal data as well. Okay, so if you actually take a look, okay, at SBI over there, you go and search, okay. Where is it? Here. Okay, if you search, where is it? How to search from here? This group. Okay. MRK. Did I mention that? Okay, so this MRK I screened from the 5th August screen over there. This is MRK. Okay, MRK over there. Okay, so this is from the screen over there. You can see from group chat over there. I also highlighted lah. So this is under the screener spotlight over here. Okay. Okay, so this is 5th, quite some time away. Is this away? Yeah, MRK, it is over here. Okay, MRK, it is over there. And then, for example, DBC, okay, this is commodity index. Okay, I talk about that, which is actually the oil. Okay, so you can see that oil, talking about oil, let's head back to oil right now. Okay, just to share with you oil over there. Okay, all right, oil, I mentioned that earlier already. Somewhere around here, that price is going to go higher, that kind of thing. Recently, I also talk about the oil over here. Okay, can you see I mentioned that on the August 15th? This is seasonal data from USO. USO, it is actually the seasonal, not seasonal, the crude oil ETF over there. Okay, from August 10 to August 27. So we are somewhere near the tail end of the seasonal data, somewhere close with 25th already. Okay, all right, win rate 90% for the past 10 years. Okay, So 2015 August, actually that is actually 14 August because it's Singapore time 1 a.m. So it's 15. Actually, it's still 14 August US day. Okay. I think there's still some upside in oil. Okay, and the crude oil and USO price is not supported at the central pivot range. Okay, just maybe I could be wrong now. Nobody knows my correct now. Okay, you can see that this is where I mentioned 14. It is here. 14. It is here. So I clearly mentioned that already. I clearly mentioned this. Okay, imagine you kind of know, okay, what stocks, what sectors will be going higher or will be going lower. Again, not 100% right all the time, okay, but we don't need to be 100% right all the time, okay, all right. So you can see over there, that is after they're going higher. So in fact, I did a swing trade on that, okay, and after that, okay, price gone higher, there is a star reversal signal over there, okay. I also told my members over there, okay, all right, so you can see over there, this is August 20th, okay, August 20th is August 20th, it is actually August 20th is here, exactly right at the star reversal signal over there. I mentioned that, okay, take note that the oil has a star reversal signal today. Consider taking profit or tighten your stop if you have a long position. So oil has a good run. I've also exited my USO in pre-market over here. Okay, not too bad, right? So you know exactly what stock to enter, when to exit. Again, not 100% correct, but you have a very good indicative, okay, idea, you know, what you should be watching out, okay? And also this one also from the bot, okay, FXI. Previously, I mentioned that, okay, it is entering a bullish seasonal window, all right, from August 14 to September 1st over there. This is the large cap China ETF as a proxy for the Hang Seng Index over also, okay? All right, so this is from the bot, okay? You can actually, you know, go to the menu and actually, you know, put it in your watch list or so lah. Then it can alert you when it is approaching, entering and exiting the seasonal window over here. Okay, so you can see over there, this is the, where is it? Okay, FXI also had a good run over here. Let's see, when I first mentioned, it is actually somewhere around here. Okay, somewhere around here. After that, good for a swing trade lah. Good for a swing trade. Okay, all right. So the latest one that I mentioned, how many want to know what is? I'll give you a good idea lah. Okay, again, it doesn't mean to be 100% correct, but at least what are the things that you should be focusing on? Okay, anybody want to know? If you want to know, just type me in the comments. If I don't see at least 15 likes, then I won't share already. Okay, because I don't know, okay. I'm not sure how many on Facebook. I 10, okay. Give me 10 likes. I think more are on YouTube than on Facebook. Okay. Can give me at least 10 likes on Facebook. Now only got C6. Okay. Okay. All right, you can see that oil has been coming down, right? Okay, so oil right now is not a good time now. Okay, again, it is at a support area right now. Okay, so again, we won't know whether it's coming down or not, but the best time to enter and exit is already over already. Okay, so if you base on the seasonal trend over there for crude oil, okay, all right. Based on seasonal trend, crude oil could be coming down. And of course, if crude oil it is coming down, then that would means good news to the inflation and also the bonds yield lah. Okay, hopefully it should come down as well over there. Okay, wow, nine Facebook like. Okay, all right, one more. Okay, one more, right? So the one that I actually, okay, I just share with you guys, okay, I mentioned that to my members as well, okay, all right. So the market update, the one that I am looking at, okay, this is 20th, okay, so this is the alpha bot alert, okay, URA, it is actually the uranium ETF. So that was first highlighted in 20th, but recently, not recently, yesterday, is it yesterday? Is it yesterday? Is it under the chat? Let me see. Let me try to find. Okay. Looking at URA again for today. That is actually yesterday. Okay, this is yesterday messages from my members over there. I mentioned that. So this is from here. All right, approaching August 20th of there. So when I mentioned about URA, it is actually uranium. Uranium. Okay, I mentioned that yesterday. Over here. Okay, I mentioned that you over here. So again, this is from my seasonal vantage bot over there. So if you actually search for search for URA, because I keep track of some of these key ETF out there. Where is it? Okay, yeah, you can see over there, it was from 20th August. So I keep track of some ETF. So it will actually notify me, okay, automatically. Again, you can see that the TLT, this is the treasury bonds. So I know that entering, okay, August 20th over here. Okay, so this is how I know from here. Then I copy and paste to the group chat over there. So again, once you see the seasonal trend for URA, you can actually type this and you'll the data will come up. Okay, all right, August 20th to September 19th. Okay, again, I need to highlight again, disclaimer, information is purely educational, not financial advice. Okay, and this is based on factual data. I'm not asking you to buy or sell. Okay, all right. So for the past 10 years, average profit, it is about 10%. Win rate is 90%. So which means that of the past 10 years, 9 years, it has gone higher. Okay, so when I first mentioned, when it was 20th, it was somewhere around here. Okay, yeah. All right, so price is starting to go higher for uranium. Okay, so I have a position. Don't ask me can buy or not now. Okay, I don't know where is the resistance area or how high you can go. Okay, but we are hitting near a resistance area soon. Okay, but there's still some room. Okay, until the end of the bullish seasonal window over there. So like I mentioned, okay, imagine you already know, okay, what are the stocks ETF that are poised to move. Okay, maybe some of you think that, oh, I just wait for Alex to mention that during the Facebook Live law. I mean, it's good enough for me. I mean, that by the time you listen to me on Facebook Live, it can be already too late already. Okay, I don't know about you lah. Okay, or maybe unless you are really profitable in the stock market, or maybe you are in others trainers group or so-called in our courses and you are already highly profitable, then up to you lah. I mean, continue to do that. But if you are still considering, okay, haven't joined Seasonal Vantage Insiders, okay, do consider joining me because, okay, I provide excellent data. Okay, so I also sometimes notify you guys, okay, when are the things that you should be looking at. So like I mentioned also, so you decide, okay, how you want to enter or whether you want to enter or not, up to you. Okay, I'm not advocating you to buy, but I think that commodities, some of these precious metal can continue to go higher. Okay, up to you. Okay, right. Okay, can clear so far or not? Good. If good, just type GOOD good in the comments over there. Okay. Talking about gold, okay, I won't go through the options flow. Okay, talking about gold, so if you take a look, this one. Talking about gold, okay, options flow for this coming week is actually not so good. But okay, but if you take a look at the gold, all right, okay, 2-day time frame, okay, there is a potential star reversal signal coming up. Okay, all right, so again, based on short-term trading, if you're holding for a few days to 1 or 2 weeks, that kind of thing, okay, this might not be the best time to enter gold. Okay, it could have a pullback and come down. Okay, but of course, okay, if you are talking about position holding for many months, okay, I think that there could be still some upside. Okay, again, we don't know. Okay, but I think that's still okay. But of course, if you're talking about long-term investing, then it doesn't apply to you. Okay, you can just buy and hold, that kind of thing. But I'm just strictly talking about short-term trading, swing trade. Okay, not the best time to buy. I can see that previously for the star reversal signal, if it appears generally, okay, there is some pullback over there. Okay, there's some pullback over there. Okay, so I won't be looking to enter gold for now lah. So I'm a bit cautious, but if you're looking ahead, okay, maybe 1 to 2 months ahead, then I think that there could be still some upside ahead, but the price need to have some pullback first lah. Okay, so again, I also need to tell you that I mentioned, right, so the commodities, might be choppy, might be coming down, okay, but there are still many stocks out there that is rotational. I mean, that other sectors are doing quite okay. So for example, the screener spotlight here, okay, I think I mentioned previously, DK, previously it was doing very well, DK over here. You see that here, when I first mentioned it was here. Okay, after that, it just go higher. Okay, I'm there. Subscribe to the, social media for seasonal advantage for those who just joined over there. So I talk about, where is it? Okay, I post the link. Let me just repost again over there. Okay, I post the link here. Okay, so subscribe to the Facebook. Okay, for seasonal advantage. Okay, as I mentioned, I just created not too long ago. So help me to increase the likes. How come still 76? Okay, can help me increase the followers or not? Okay, all right, help me increase the followers. Okay, YouTube also. Okay, seasonal advantage. I talk about the MRK. I talk about BMY. BMY is actually Bristol Myers. This pharma stock was flat before it broke out over there. Again, it is from my seasonal data as well. Okay, so you can see here that the where is it? This is, you can see it down there. This is from the bullish screen from the S&P 500 from 13 August screen. Okay, Bristol Myers. Okay, for the S&P screen, it can be or might not be within the active seasonal window, but happen to be within the seasonal window for BMY. Okay, so from 13 August screen, I screen out over there. You can see over there for BMY. This is Bristol Myers. Okay, so do subscribe to the YouTube channel. So I do case study and such. Okay, so somewhere around here. Okay, it's somewhere around here. Okay, just go higher. So imagine you have the screen, you know exactly what stocks to keep a lookout for. Okay, just camping there, wait for the chance to enter. Okay, go where to like. You never use Facebook before, is it? Okay, follow. Just follow. I mean, you can. There's a follow button, right? Just follow can already. Thank you so much. Okay, all right. Can, for those who don't know, okay, I think that because I already follow already. So you go to seasonal advantage, right? There is a follow button. So if you go to the YouTube channel, okay, I think there's a subscribe button. Okay, P Lee. Thank you so much. Really appreciate that. Okay. All right. So this is it. And what else? Okay. Just want to highlight certain things. Okay. Again, not every single stock is profitable. Okay. I need to tell you that I also screen some, like for example, Vericel, VCL. This is one stock I get stopped out. Okay. I cannot just show you every single one that is good. Correct or not? Okay, BCL, I got stop out. Okay, this is this. Okay, yeah, I entered around here. Okay, and you get stop out. Okay, so in hindsight, I shouldn't have entered this lah. But anyway, I won't explain the reason why. But in hindsight, I shouldn't have entered that. But anyway, okay, right, we do need every single one to be a winner. So this is Cintas. Cintas I also exited. Okay, I also highlighted that to my members. This is CTAS. Do you guys know what it does and what it does? Providing corporate uniform for all the companies and businesses. Yeah, they like provide 校服这样啦, okay? Uniform for companies. So you can see over there, this is CITAS. Okay, this is CITAS. Today is down, but when I first mentioned, it was somewhere around, I think somewhere around here. Okay, so it also go higher. Again, for swing trade, confirm got profits to be made one. Okay, this is for swing trade, confirm got profit to be made one. Okay, and then what else? GM I'm still holding. So this is that. Okay, GM, when I first mentioned, it was here. Okay, so all these are non-tech stock. Okay, of course there's pullback right now, but generally you can see that it's go higher than a pullback right now. So all these are non-tech stock over there. Okay, and then I talk about wood. Okay, this is ETF that I track also. Okay, right, also from the screener itself. So this is the timber and forestry ETF. This is not tech. this is not tech also, okay? Not sexy, okay? All right, but again, you can see that there is a star reversal signal over there. When I first mentioned it was here, okay? After that, enter, okay? I also exited. That there is also a swing trade to be made also, okay? So these are from the screener. So the screen will help you to screen out potentially what are the stock that you need to look out for, okay? STT, this is bullish SV, okay? Bullish SV, okay? STT, this is actually State Street Corp over there, okay? STT, okay? I also have a position. Also, non-sexy stock, this is a financial stocks over there, okay? When I first mentioned, okay, it is here, okay? And right now price has gone up like that. Also profit to be made lah, okay? All right, so I mean that, you know, again, I say that, you know, sometimes too many people are just focusing on the tech stock lah, the big names or the SpaceX, all these names that you only know. So all in all, you only know about 20 to 30 stock in your watch list. And there are many stocks out there, you know, that are moving that you are not aware of. And all this, the screener will help you to screen out this kind of stocks out there. Okay, so there are actually still profit to be made one. There are still profit to be made one. Okay, so once again, okay, if you want to check out seasonal vantage, you think that it can help you to be more profitable, at least for me, it can. Okay, I mean, I also give guidance and such in this. Okay, you can head over to seasonal vantage. Okay, check it out yourself. If you have more question, okay, you can WhatsApp the team over there. There's a WhatsApp button over there. You want to contact me, okay, also can contact using QR code WhatsApp, okay, or send your question over there lah. Okay, any question so far? Any question so far? Okay, all right. Oh, just now it's 1 hour. Any question so far before I end the session today? Okay, before I end the session today. Any questions so far? Okay, I'll give about 10 seconds. Okay. All right. So, but all in all, all right. So, this week I think the market still okay lah. But moving into September, okay, I will be a little bit cautious. Okay, based on historical data after the OPEC side, the week is okay. Okay, but after that September market might be a little bit weaker. Okay, again, that doesn't mean that all the stocks will be weak. Okay, there will still be some stocks that are so-called bullish. Okay, you just need to know how to screen them. But overall, okay, I'll be cautious heading into September. Okay, but this week I think a lot will be pinning down on Nvidia earnings. If the Nvidia earnings are generally good and if it can get up higher, that will be bullish for the market. That will be bullish for the market. Okay. If not, then have to go back to the options flow and see what's the key level that I mentioned just now. All right. So once again, right, if you find sharing today it is valuable, okay, can you just type value in the comments, or just type letter V in the comments, or just type letter V in the comments. And I really appreciate, okay, if you can actually, go to my SV social media platform, okay, and just actually like, follow YouTube, Facebook, Instagram, okay? Any question you want to ask about seasonal vantage as the data, that you can feel free to WhatsApp me also lah. Okay? All right, so with that, okay, thank you so much for being here and being on time. Okay, just now I think one person say that I'm long-winded, then don't listen to me lah, doesn't matter lah. Okay, yeah, it's okay. All right, so with that, thank you so much. Okay, yeah, most likely not okay, most likely next week still have lah. Okay, but the week after I think school holiday, so I won't be doing live stream. I'll be away also for a vacation. Okay, so with that, thank you so much. Okay, with that, okay, yeah, see you guys again. All right, good night, 晚安 and bye bye.